Washington, Reuters, U.S. consumer prices increased marginally in February amid a decline in gasoline prices and a moderation in the cost of rental accommodation, the latest indication that an anticipated pickup in inflation likely will be only gradual. Strong inflation numbers in January had sparked fears that price pressures were accelerating, leading financial markets to expect a more aggressive pace of interest rate increases from the Federal Reserve than is currently anticipated. These figures should satisfy Fed policymakers that inflation is not too cold, as last spring a Euro trademark S numbers hinted at, or too hot, as might have been inferred from the January print. Said Michael Farrelly, an economist at J.P. Morgan in New York. The Labor Department said on Tuesday its consumer price index rose 0.2% last month after jumping 0.5% in January. In the 12 months through February, the CPI rose 2.2%, up from 2.1% in January as the flat reading from last year dropped from the calculation. Excluding the volatile food and energy components, the CPI gained 0.2% after accelerating 0.3% in January. The year-on-year increase in the so-called core CPI was unchanged at 1.8% in February. Last month a Euro trademark S increase in consumer prices was in line with economists' Euro trademark expectations. The Fed tracks a different index, the Personal Consumption Expenditures Price Index excluding food and energy, which has consistently undershot the central bank Euro trademark S 2% target since mid-2012. The dollar slipped against a basket of currencies on the inflation data. The greenback was also hurt by President Donald Trump Euro trademark S firing of Secretary of State Rex Tillerson after a series of public rifts over policy on North Korea, Russia, and Iran. U.S. Treasury prices rose while stocks on Wall Street fell. Full employment. The CPI report came on the heels of data last Friday showing a deceleration in wage growth in February as well as a downward revision to January Euro trademark S increase in average hourly earnings. Average hourly earnings rose 2.6% on an annual basis in February, stepping down from January Euro trademark S 2.8% increase. Against the backdrop of a tightening labor market and strong economy, the Fed is widely expected to increase interest rates at its March 20 to 21 meeting. Given the steady price gains and moderate wage inflation, some economists did not believe the Fed would upgrade its 2018 interest rate forecast at next week's Euro trademark S policy meeting. The central bank has forecast 3 rate hikes this year. Many economists expect that at some point it will raise its projection to 4 rate increases this year amid optimism that the robust labor market will start boosting wage growth at least by the second half of the year. Policymakers consider the labor market to be near or a little beyond full employment. The jobless rate is at a 17-year low of 4.1% and economists expect it to drop to 3.5% by year-end. A weakening dollar and fiscal stimulus in the form of a $1.5 trillion tax cut package and increased government spending are also seen spurring inflation. A survey of small businesses published on Tuesday showed the share of owners reporting higher selling prices in February hit its highest level since July 2014. The NFIB survey also showed nearly a third of owners reported raising compensation to retain or attract workers last month, the largest share in more than 17 years. Solid domestic economic momentum and the impulse from oncoming fiscal stimulus will underpin a gradual build in inflation toward the Fed Euro trademark S 2% target. Said Gregory Dacko, chief economist at Oxford Economics in New York. In this environment, we expect the Fed will raise interest rates 4 times this year. Gasoline prices fell 0.9% in February after rebounding 5.7% in January. Food prices were unchanged, with the cost of food consumed at home dropping 0.2%. Food prices rose 0.2% in January. The core CPI was restrained by a moderation in rents. Owners saw Euro trademark equivalent rent of primary residence, which is what a homeowner would pay to rent or receive from renting a home, rose 0.2% last month after advancing 0.3% in January. Households also paid less for health care. Prices for new motor vehicles fell 0.5%, the biggest drop since August 2009, after slipping 0.1% in January. Used car and trucks prices declined after 4 straight monthly increases. Apparel prices continued to march higher, rising 1.5% in February after surging 1.7% in January. The cost of motor vehicle insurance rose by a record 1.7% last month. The cost of airline fares rebounded after falling in February.